I continued losing a lot of money trading Forex even after I'd learned technical analysis, fundamental analysis, and sentiment analysis. And in this video, I am going to break down for you guys the reasons why I continued losing money. And I hope this is going to help you also who is in the same situation that I was in. Now, to just go back a bit, I started trading Forex about 3.5 to 4 years ago. That was in late 2020. I started trading Forex. And when I started trading Forex, I first started by trading on IQ options, which is a binary options kind of website, which is not really Forex trading. And through trading on IQ options, I did make some money, made some withdrawals of $300, $400 here and there. But most of it, I kept on putting it back in the market and I was losing it. So I realized that IQ options is not a real broker like for Forex. So that's when I landed onto MT4, MT5 brokers that I started using to trade Forex. And when I started trading Forex on MT4, MT5, it opened my eyes to see the difference between options trading and also Forex. Okay. So in that journey of learning how to trade Forex, I learned so many things. I started by learning how to use technical indicators, moving averages, MACD, all those, the alligator, Ichimoku cloud, and many others. I tried to tweak those indicators to favor me, but yeah, I would succeed. Some of the time I would like make money, but end up giving it back to the market. And I asked myself, are indicators not meant to win? Are they just designed to make traders to lose? But after looking at it in a different angle, I realized that indicators are not actually bad to use, but the way we use the indicators and the timing that we use the indicators in is what causes us to lose trading indicators. So I went on doing research and I started hearing a lot of people, traders, saying you need to learn price action and not use indicators, don't rely on indicators and all that. So I dived into monk mode, what you guys call monk mode. Most of the people really don't realize what monk mode is. When someone says monk mode, it's really monk mode. I could spend time on the computer screen studying the charts from the time I would finish doing my 9 to 5. That would be from 9 p.m. up to almost 4 a.m. in the morning. That's when I would go to sleep. I even had issues with some health issues because of not having enough sleep, just because I loved the charts and I wanted to learn how to do technicals properly. So after around 8 months of doing this, I realized that I have understood how to draw my support, resistance, trend lines, and all of the technicals that I need to understand how to draw. Some of that knowledge that I learned from that time is what I actually teach on this channel. And most of you guys ask me how I learn all these things that I teach you guys, but that is the time when I really went in monk mode and learned most of the things. So when I started trading support and resistance coupled with trend line, I started seeing some results. I started seeing some consistency in my trading, but still every amount of money that I would make, I would end up giving it back to the market and I would end up losing it all. So I started asking myself, because I was seeing my other fellow traders on YouTube and Instagram and everywhere, I would see them almost every week they are profitable, almost every week they are profitable. Little did I know that most of the people who post things online, they only post profitable trades. So that confused me for some time, and I went in for that and I thought that is how it is. I kept on making money, withdrawing, losing, withdrawing, losing, but I really knew that the strategy based on support and resistance and trend lines was good and was actually making profit. But there was one thing that I did not understand, and I believe that many traders, up to 90% of the traders who lose money in the Forex market, they know how to do technicals properly, they know how to do their fundamental analysis, they do all their forms of analysis, but there is something that they do not know. And that is what I'm going to talk to you guys about and show you guys in this video. Please, if you're watching this video and you like my content, you want to be a part of my channel, please subscribe to this channel. Bring this video to at least 500 likes and I'll come and make for you guys a full detailed video of up to 1 hour in length, teaching you from the beginning to the end how you can become a profitable trader. I will teach you guys the fundamentals, the technicals, and all the psychology in one packaging of a video that you need to become a profitable trader. All I am asking you guys is bring this video to at least 500 likes, share this video on your social media platforms, and also, yeah, subscribe to the channel if you're not yet subscribed. Just subscribe to the channel. It is free of charge. So let's continue with the video. Yeah, after me trading for 1.5 years at this point, I was seeing profitability, but I was not seeing consistency. So I would win, I would lose, I would win, I would lose. And that is when one day I took a trade on GBP USD. I remember the pair very well. I took a trade on GBP USD, and this trade that I took on GBP USD, it was actually a sell trade. I took a sell trade on GBP USD, and I had a stop loss of 73 pips. I remember that trade very well, and I was targeting to trail that stop. I didn't have a take profit. I wanted to trail that stop, so I executed the trade and I left the trade to run. By that time I was still doing a 9 to 5, and in the evening when I came out of my workplace to go home, I checked the trade, and the trade had moved into profit of around 30 something pips. It was around 30 something pips into profit, and what came into my mind was to trail my stop into break even and then let the rest of the trade to run. Okay, that's what came into my mind, and that's what I did. I did that in my car before I drove off to go home. And when I trailed my stop to break even, yeah, I relaxed. I knew that was a risk-free trade, so I let the trade run. When I reached home, I had forgotten about the trade. I took a shower, had some supper, got onto the TV to watch some news, and when I remembered to check on the trade, I went to check on the trade, and that night there was FOMC. I had not checked the economic calendar very well, so there was some news. There was FOMC that night, and when FOMC came out, it allowed the trade to move more bearish, so it pushed the trade further into profit. When I opened up the MT4, by the time I was trading MT4, I wasn't using MT5. When I opened up my MT4 on the phone, I saw that the profit, which was floating, had gone beyond the 73 pips risk, because I had risked 73 pips to gain as much as I can, because I was going to trail my stop. So instead of 73 pips, the market had moved over 180 pips into profit. So what I did was I trailed my stop to at least 100 pips. That's what I did. I trailed my stop to 100 pips, and then I let that trade run till the next day. So the next day in the morning when I checked the trade, I found that the trade had reversed and it had hit my stop. So I was stopped out at 100 pips in profit. I realized something from that day. I realized that it is not good for you to favor the market. Do not be favorable to the market. Just as the market is not favorable to you, do not be favorable with the market when it comes to your money. When you make profit in the market, make sure you do not share that profit with the market or allow the market to take that profit from you. Be selfish to the market, because the market is selfish to you. What was refusing me from taking 180 pips and closing that trade completely? It was greed and the fact that I thought that the market is going to continue, not knowing that the market has so many uncertainties. So many, you cannot predict the market. Taking the money that the market gives you, or the amount of profit you make from the market, is what allows you to continuously come in and take what belongs to you. Because when the market reverses, it does not favor you. It takes whatever it gets on its way. It does not say, let me take 2, 3 pips or 5, 10, let me take 30 pips, let me take 40 pips, let me wait for it to reach this, then I hit it, this person's stop loss. No, the market takes whatever it finds on its way. If it finds your stop loss on its way, it will take it without excusing you in any way. So why should you favor the market by trailing your stop to very little profit? Why don't you just take the entire profit? Or why don't you just set a standard take profit or a static take profit where you are going to be taken out of the market with your profit? Now, I am not against trailing. I'm not against trailing. I encourage many traders to trail the market. Trail your trades mostly to break even or to some profit, so that you have a risk-free trade. But after you're risk-free, make sure that if you see the market has given you some good money, close that trade and stop the trailing. Just close the trade and move on. That is one thing that I learned, because when I went back to my old trades, the history of my trade, I saw that I was being stopped out by the market for a very small percentage of profit, and yet the trade that I had taken had actually moved a little bit more than what I had taken. So I was taking little amounts of money, small amounts of money from the market, while I'm being stopped out. So I calculated and I saw that if I was taking the full amount of money that the market had given me, I would actually be more profitable in the market. When I changed that, I got to see a very, very drastic change within my trading results, and I started seeing big profits coming in, I would take a 1-to-2, 1-to-3 risk to reward ratio, and my trade would push up to maybe a 1-to-3.5, and I would close it at a 1.3, a 1-to-3.5 instead of a 1-to-3 that I had originally planned for. So when I started taking those big chunks of profit from the market, that's when I realized profitability and consistency. What I do is I take my trade, then after I've taken my trade, I trail it to break even or to some profit. When it is risk free, if I get something substantial, I close the trade. I don't continue trailing it. The second thing that I wanted to share with you, which is not going to take so long, is this one thing: jumping from one strategy to another. On this channel, I think I have more than 100 strategies I've shared on this channel if you go and check. But when sharing these strategies, I'm not telling you to go and use all the 100 strategies. I'm showing you a variety of strategies so that you can pick one or two for you to apply according to how you feel fit. Okay, because the strategies I share here are swing trading strategies, day trading strategies, scalping, and also position trading strategies. So you just choose according to your style. When I started trading and I developed these strategies that I teach you guys, I realized that all these strategies are profitable. The only thing that you need to do is to manage your risk while you're trading those strategies and stick to just one or two strategies. Don't trade multiple strategies. For me, when I learned all these strategies, what I would do is that today I would trade this strategy, the next day I trade the other strategy, the next day I trade the other strategy. So my results were not consistent because I was not having a consistent strategy that I was following. Get one or two strategies, master it, focus on it until you learn it properly, and then follow your risk management. Make sure you trail your stops to break even or to some small profit, and then if you see the market giving you a substantial amount of money, take it from the market, close your trade. Do not be lenient with the market because the market will not be lenient to you. Take whatever amount of money that the market gives you that you see is substantial enough for you. Close your trades. Don't over trail them, close them. Yeah, so the final thing that I wanted to tell you guys is this: whenever you are trading the market, whenever you're trading the market, do not look for very big moves in the market because that can be very deceptive. You may come into the market and you want to wait for NFP, CPI, FOMC, or Jerome Powell's speech, and you want to wait for that time to get a very big movement for you to make profit. That is good, but do not always wait for big movements for you to trade the market. Trade the market when there is low volatility, and also trade the market when there is high volatility. When you do that, you develop a solid trading muscle that can allow you to trade in all market conditions. Because if you are kind of a trader who only trades during volatile sessions or during volatile times, there is a time when the market becomes very quiet. When the market becomes quiet, it starts to consolidate most of the time. Okay, it starts to consolidate, and when the market is consolidating, you will not get the trades that you've been always taking, and so you'll start forcing trades and you'll end up having a losing streak. So learn to trade the market when it's not volatile and also when it is volatile, so that the time when the market is consolidating, you can still trade. The time when the market starts to trend, you can still trade. Okay guys, I hope this is going to encourage you guys and help you guys with your psychology or when it comes to trading. Make sure you follow all these things, guys. If you found this video valuable to you, please don't leave the video without liking it, sharing it, subscribing to the channel, commenting down below with some of the things, some of the challenges that you've gone through as far as trading is concerned, and also go and watch this video here and also this video here. They will help you understand more on Forex trading psychology. Thank you guys for watching. Until next time, peace and out.